Good morning, everybody. Welcome to the Flow Show, Thursday. I've got what the date is, 14th of March. Slowly chewing through the year. Good morning, Mr. K. How are we?
Morning, Ryan. Morning, everybody. Yep, ready to rock and roll again.
Again. Every day. It's rinse and repeat. The same old stuff, day after day. No, it's all new. But every day is a learning day, as far as I'm concerned. You always learn something new. Even if it's that things stay the same a lot, like euro dollar at the moment. Right, let's go. A senior LDP politician in Japan said that with the Bank of Japan likely to raise interest rates as soon as next week, has he heard a little something? The government needs to get its fiscal house in order to mitigate financial risks. If they haven't got their house in order, potentially a week before they're about to hike rates, one has to wonder when they will get their house in order. But yeah, it's definitely will be part of the consideration of the BOJ in going slow and steady, so they don't slam the government with higher borrowing costs and everything that comes along with a tightening policy. It looks like all the banks and strategists and economists and everything are coming around to the Forex Flow or the Flow Show way of thinking, because according to a Bloomberg piece, high hopes for a yen rally have given way to talk of a slim gain this year. So strategists are slashing their estimates for yen strength this year because the BOJ isn't expected to hike aggressively when it does change. The Bloomberg survey had its medium of the dollar yen to finish 2024 at 140. HSBC see it at 136. Nomura have just cut their forecast to 143 versus 135. Their forecast was last late 2023. Mizuho have also cut their numbers as well. So a lot of the market now coming around to what we've been saying for a few weeks, that perhaps we've had the move in dollar yen. As we were saying as much as yesterday, this move here looks a lot like that's the market doing its Bank of Japan trading. And now we're seeing lots of people not expecting significant yen gains moving forward. So again, we might be in a bit of a buy rumor, sell fact situation into next week, depending on what happens. The head or the chairman of the Japan Banking Association says that the end of negative rates are going to have a limited economic effect, and that the BOJ will keep accommodative policy for a while, much as your reader has hinted at. Says it's unlikely to see a sharp rise in rates and the yen. So another one there. The likelihood of Japan achieving the BOJ's price target has been heightening steadily. Okay, what do you make of all that? The banks getting it wrong again for one thing, and their forecast, and now cutting their estimates.
Yeah, welcome to the Flow Show. I think they don't admit it, but they're all plugged into what to our show.
Yeah, exactly.
They need to admit it and give credit where credit is due, I think. No, but again, there's enough uncertainty around the upcoming meeting. We've been saying that now enough, right? And the uncertainty has been building up. And but as to what the aftermath is concerned, I just keep my view, and that it may not be as violent as people expect. And again, for people who have never listened to our show, I think there could be some mechanical effect on the yen as well due to the whales. But once that effect is gone, unless they really embark, and Ueda says, "Oh, now we're embarking on a hiking spree, and we are going to take the rates to above 1% very quickly." Unless they announce that, I think it's going to be about a similar pattern as we have seen up to now. Buy yen, and don't forget to take your profit the same or the next session. And I still think that's going to be the case, because I don't see UEDA and the government embarking on a very aggressive rate hike path, right?
Yeah, no, very much so. And yeah, it's, I don't know. And, you know, we're talking. We've got a baseline scenarios for what the yen might do, but there's probably gonna. I would think maybe a period of a couple of weeks where no one really knows what to do. You know, whether these whales start coming in, whether they hold off a little bit. So there's probably going to be a fair bit of volatility, I would think, for a couple of weeks after, before we get a real sense of which way we want to go. So, you know, don't just take the announcement and think, right, that's it, and we move on. This isn't the Fed or the ECB, where they have structured rate hike cycles, rate cut cycles. This is a generational thing for Japan, and there's going to be a lot of sorting out to do afterwards. So there's going to be probably a lot of ripples. So again, as I say, it's going to take a while before we probably get a clear sense of what yen wants to do moving forward.
And you will probably show it, but there's an interesting thing. And even if it's a delayed number versus the actual day right now, and it's end of last week numbers, I think those foreign bond buyings numbers that we've seen coming out of Japan, they are positive. They are not selling bonds, foreign bonds, the Japanese right now. So that's where I'm saying, like, just be patient to also look what they are doing, really. And since the start of this year, I've been saying they are putting their money back to work elsewhere, because they are not yet ready to pile into the JGB again. If they are ready to do so, that should start to reverse and should start to really be negative, in my opinion.
Yeah, that's another place we need to keep an eye on as well, just to see how the money's flowing. So yeah, so lots to look forward to. So as I say, don't get caught up in just the BOJ announce XYZ and that's it, we're done and dusted until the next rate meeting. There will be lots of stuff that, you know, I'm not too proud to admit there's some stuff that will go on that we won't know about, I don't know about, or won't understand perhaps, and it's going to be a lot of learning process for all of us, I think. But we'll keep you covered here on the Flow Show, and the banks will keep them covered as well when they sneak in and have a look. Right, let's move on to Sweden. A bit of data out of there this morning. Inflation numbers, Kay, going the right way. That got Riksbank's Bremen coming out saying that this Fed data strengthens the view of a sustained inflation drop. Anything you pick out for the numbers? Quite a significant drop, really, in some of these.
That's a significant drop versus the past months, but it's again the month before, the prior month, was actually a bit of a spike. There was actually a bit of a spike there, and now it's corrected. So and also I would like to point out, Sweden is not how shall I say, a huge market, right? It's a big country. There's a lot going on, but it's still a very decent country, but it's not a huge market. So those numbers can be a bit volatile over there. But yeah, we're coming back to numbers that we've seen prior, and I think the other one was the December number, the one before last. So yeah, back to the level. It's a decent drop, but then it's compensating the spike that we saw. So the market has not really we're not ballistic on lower CPI in Sweden. Yeah, I mean, Euro stock is smalls higher, but not really doing an awful lot either, right?
Yeah, very much so. Have a quick look at that. Not doing much at all. There's not much doing much at all at the moment today. Right, let's see what those bods at the ECB have been up to. We've had one of the doves out, and he's really, I wouldn't say breaking ranks, but he's come out with the most dovish comments so far. This is ECB's Stornaras, that man over in Greece, says they have to cut rates twice before the summer break. And that he says 4 interest rates in 2024 seem reasonable. It doesn't buy the argument that the ECB can't cut before the Fed, and monetary policy must not become too restrictive. ECB's Muller a little more on the chillax zone, says that we need more information before we cut rates, and it's possible we'll get that info in the coming months. There's definitely this battle going on with the Doves and the Hawks, Kay. You know, we had Vilroy changing his tune in a matter of hours from touting April to siding with June. We had that sources piece Friday where the Hawks might be conceding a June and July cut if others move away from April. And now Stornos wants 2 cuts before the summer break. So,
yeah.
And 4 cuts over the 2024.
It could still mean June and July, yeah? 2 cuts before the summer break. So it's vague enough. It seems they in their own words, because Lane just spoke as well, like 10 minutes ago, 15 minutes ago. In their own words, it does seem like the Doves have given in to the Hawks for April, and we're looking at June, really, right? That's the highest probability, I would say. And then they give their own dovish and or hawkish nuances, but it does seem they all converge towards June, which would make the April meeting a big surprise if they would go. That's the only thing I can say more about it. We are setting up for a bit of a preset scenario, but then against that, and we are traders and we always need to be prepared for the unexpected. That makes the April meeting a very big surprise meeting if something would happen there.
Yeah, and it's either going to be a surprise or it'll possibly be a setting up meeting where they tee it up for June.
Yeah, well, that is what I think. But then that's all right. That's what the market will be expecting anyway. So that's okay. If it's a setting up for, that's okay. I mean, it's a bit different than for instance, the Bank of Japan, because now, since a lot of people are leaving March on the table for actual for an actual move from the Bank of Japan, I think if they are just teeing us up for doing something in April, that's going to be very negative yen. If ECB says in April, get ready. We are now discussing it. That is sort of what the market is expecting.
Yeah.
And should have, in theory, a lesser impact. You will always have the algos saying like they will read the one word cut, and euro dollar is probably going to lose 50, 60 points and then taken back up again.
Yeah, very much so. Yeah, I mean the way euros remain in bid, you can't say it's going to do much when they do cut, unless the market does get caught out with a 2-cut scenario, i.e. a quick cut in June and another cut in July, which I don't think it's really expecting at the moment, but that can change. So yeah, even if dovish talk about cuts and the euro isn't going down, or euro dollar isn't going down, so the market happy with that. So we'll need something more to get it really moving, I think. Right, while we're on the ECB, they've announced how they're going to change their framework for steering money market rates after their review. This was something that was touted previously in terms of what they're going to do between deposit rate and the main refinancing rate. So they expect short-term money market rates to evolve in the vicinity of the deposit rate, wherever that goes at the moment, 4.5%. They will lower the MRO rate, the main refinancing rate, on the 18th of September, and they will reduce the spread with the deposit rate to 15 pips. So they're narrowing the gap there between those two. This is all really just tinkering. It's nothing we really need to worry about. It's how they're going to keep providing liquidity, take away a bit of pain between the MRO and the deposit rate for banks. So it's really just technical stuff, this. No real big deal for us trading it. But they also said they're going to run new and structural longer-term refinancing operations, and a bond portfolio at a later stage. So all those LTROs, TLTROs, and all the like, all the acronyms they've got running, they're going to do other ones for that as well. Right, coming over to the US, not an awful lot, no data yesterday of note. Treasury Secretary Yellen has warned that the inflation decline might not be smooth, and expects the cost of rental housing, which has been the single largest contributor to inflation, to move lower this year as new leases are signed. The housing stuff is the big watch point for a lot of the market. Over in autos land, Wells Fargo had a piece out yesterday. They were cutting their expectations for the price of Tesla, but they cited that it looks like demand is dropping. Now, you know, this is something, the auto sector is something we've been looking at here some time ago. Gavin also had a piece out in the newsroom, in our newsroom, saying that automakers from Ford, General Motors and Mercedes-Benz, Volkswagen, Jaguar, Land Rover and Aston Martin are scaling back or delaying their EV plans. They say, though customer demand for EVs hasn't shown up in the way executives had expected, sales of EVs are still predicted to increase in the years to come. So again, that falls in with someone I know in the industry that say a lot of the sales in EVs have been first and second adopters. That's people who like to jump on the bandwagon, and companies who are doing the climate switcheroo. But the third adopters is, you know, Joe Schmo on the street, and that's where these problems are coming in, and that falls into the consumer part of things that we've been monitoring as well. So it's all these little bits and pieces falling into place that perhaps we're going to see the consumer a bit looking a bit tougher to sell to in the coming months, which then will feed into what the Fed are likely to do and what the economy does, because pretty much the US economy is a consumer economy. Right, unfortunately, some bad news. We're up and running with US polls on the election. There was a poll out from USA Today and Suffolk University, and that poll saw Trump leading 40% to Biden's 38% in people who they're going to vote for. There were some details within the poll on the job that Biden's done so far. The strongly approve was 16.2%. The strongly disapprove was 42.1%. Compared to the job that Trump did when he was president, the strongly approve was 25.2%. The strongly disapprove was 37.7%. So people taking a bit of a side on Trump. First things first, one poll, opinion poll, there's going to be thousands of them dropping now, and they're all going to start now that it's nailed on that it's going to be Trump versus Biden. So we're going to have floods of these. But it's going to be important for the market just to see how some of these early polls come out and which way they lean, because then it's obviously going to give a little bit of an indication on how things are going to turn out when we get to the election. I can't wait. Kate, we're going to have to part with dancing and magic tweets again from the orange head one.
The magic tweets. That's something I actually look a little forward to, because they're a good laugh when the markets are quiet and stuff. But I'm for sure not looking forward to the hundreds or thousands of polls that we are going to get. My idea is to just not look at them and then wait for November and see the result, because otherwise it's going to drive us crazy.
Yeah, well, I'll see if I can limit them to talking about on the flow show to once a week. Just have a quick blow through some of them if there's anything of note. But yeah, I'm dreading it. Right. Yeah, good luck to you lot, Bran. Well, don't forget we're going through an election over here, so that's all going to start up over here as well. So we will feel each other's pain on that front. Right, that's yeah, Graham, we've got an election this year. Don't know when yet. We still haven't called it, but it's got to happen before January. So at some point we'll be going through the ringer as well. Kate, any other bits and bobs that you've seen of importance?
Absolutely not. Let's have a look at what's going on for the rest of the day. And today, tomorrow, we are going to have a slew of data coming out of the US, looking at the, let's say, relative fragility of the dollar, perhaps. If you look across, it's could be interesting what's going on the next 2 days, right? The market is still pretty much in the same scenario of selling dollar rallies, but I also think before we look at those numbers and looking at how it trades, I'm not sure whether there are a lot of real flows in there, but we are just seeing the flows that are either derived from a bit of those equity markets and a bit of the possibly a bit of bond markets, but there's no real directional or driving forces flows going through the market right now. I reckon.
Yeah, no, I mean it's painful watching in euro dollar at the moment. We've moved up a bit. I've been last few days. Every time I look at the price, it's been trading 109.30 something, and today it's trading 109.40 something. But very tight ranges. What have we got today? We have a 23 pip range for euro dollar today, and if it wasn't for that little extension yesterday, it would have been more or less the same yesterday. So things are very tight. But we have data, as Kay mentioned, PPI. That's going to add or subtract a bit to the CPI data that we just got. But I think the bigger number is going to be retail sales coming up after that wonky January that we had. Retail sales expected to bounce back in February. Our man Magic's in the chat room put up Bank of America's forecast for retail sales, which shows them coming in negative again. And they've been pretty good on their forecasts for this number, so worth paying attention to. If you're in a chat room, go into the newsroom and have a look at that. Kay, what happens if we get a miss on sales and it's another negative? That's going to get the doves cooing.
Yeah. I do think it should put a little bit of pressure on the mighty dollar, because that's just the mood right now in the market. And although I'm not a huge believer, it's part of the seasonal pattern as well. That stuff like sterling, Aussie, whatever, they're strengthening a bit versus the dollar. It's looking as if we are going to see it, and especially the retails, if they come in weaker than expectations. I don't think they forecast an outright negative number, but the components perhaps a bit weaker. But yeah, it should be enough just to keep the market doing what it's doing right now. But selectively, okay. I mean, we've seen dollar yen, for instance. That's like hanging around here, not trading towards the low. I think if the number is a tad weaker but not outright negative, we have seen those yen crosses starting to gradually pull higher again, and that may rather be the result than a really very big drop in the dollar yen, perhaps. Yeah, look at that one. Yeah, all those, and especially when you look at those sterling yen, Aussie yen, Kiwi yen, those ones, they are doing relatively well again. So perhaps look at a different dollar if the numbers come in weaker. And there's one that is particularly now on the weak side, and I guess you'll have a look at it as well, because you're looking at some levels in the dollar mix.
Yeah, very much so. So I mean, we had the CPI data. Dollar rally got smashed. We had the NFP, which the data wasn't bad. It was cut soft landing data, but it wasn't bad data. The dollar got knocked. Even if it's good retail sales number, there's probably a low probability that any dollar rally lasts longer than 10 minutes at the moment in the way the market's doing it. So there's I don't know if you see anything, but I don't see any real situation where the dollar significantly rallies. It's either good data it rallies and gets hit, or it's bad data and it gets sold straight away.
Yeah, you've got this situation where if it's good data, the equity markets are probably going to print fresh highs again.
Yeah,
yeah, it's a bit of a vicious circle. I would not yet call it, but it's going to take a really strong beat and perhaps PPI surprisingly strong today to put a real bid under the dollar. But yeah, for now it's undeniable. Every dollar rally gets sold.
yeah, exactly. It's important to know that when you're trading, because you need to know which way the wind is blowing. At the moment, the wind is blowing towards a weaker dollar, so rallies get hit. Bad news gets hit harder. So if you know that, even if you're the biggest dollar bull, you need to understand that. You need to know whether you're trading with the wind or against the wind, because that should be reflected in your risk management. If you're trading against a strong wind, then you keep your trade smaller and your stops tighter. If you're trading with the wind, you can maybe give it a little bit more room, and that, don't fight your bias too much. You can be a dollar bull all you want, but if dollar keeps getting sold, how many times do you want to fight against that? But just it's important to know, say, which way the wind is blowing. Brand's right, yields are probably going to be a good indicator, particularly tens. If it gets back above this 420 mark, we had a little pokey yesterday, haven't held it. So if we get solid retail numbers and we get above there, then that will give something for the dollar to cling on to. But even so, we've seen this bounce back in yields and the dollar hasn't really responded. So there's a bit of a correlation detachment going on that we've been speaking about for the last few days. So again, you need to know all the different winds and which way they're blowing. As far as price wise, there's not an awful lot to say about anything. I'll have a look at dollar mex, and then Kay, if you want to look at it in more detail, because I know you've got more stuff going on there. This one I was looking at, this is the I'll go wide first and then we can look at it maybe at daily. So this was a level I've been looking at maybe for getting into a long. It starts around 1690, 1669, 70-ish, that sort of area, that very decent bottom. We had a little move through, it held, and then it held after. But if you look at it, the price action this morning, we've come through it pretty easily, and we're trying to hold below it, and we are holding below it. So I'm less inclined to have a go here. We've got a bit of a line in the sand, that middling low, 1662. If it holds there, then I might think about having a little long. But I think, given the price action we're seeing in this one, if you get a dollar rally here on the back of good retail numbers, I think that's going to be hit as well. And then maybe if we come back down quickly, we're possibly going to break this level. So for me, it was this price action here and here that's potentially more important than the low we made here, because that's where we had it. Bit of an extension, then we held it again. So the fact we're breaking that level is a bit concerning for someone who was thinking about trying long. So I'm going to sit on my hands, I think. And as I always say, you always judge a move on its merits at the time. I wanted to buy it down here when we were up here, but now we're here. Now the price action is saying, hang on a minute, that strategy may not be quite right. So I'm taking a bit of caution on that one.
I think you need two things there for that to bounce, and for any mix cross, let's say for the mix to weaken, is a negative risk environment, but we don't have it right now because the equity markets are printing highs. We could argue that oil's moving up could be seen as negative risk, but they've done really little compared to risk moves. You could have a collapsing bond market, could be one, but what stands on the other side of that needing to materialize is that you actually have a very positive equity market. Bonds are going up and down, but not really doing an awful lot. If you look at twos, for instance, who are pricing close to the Fed, we are back at where the dots are. And there's and then there's this 11%. It's an 11% currency. Let's not forget that, right? And the day before yesterday, I must say, after a set of mixed, I'm not going to say bad or very weak data, but after a set of mixed data, the IP came in quite strongly on Tuesday as well, and dollar MEX has been moving lower, and MEX pairs have been moving lower since. And I'm actually in a small short Euromex, as the people in the room know. This, to me, there's still more going for it than against it, especially if you look at that first scare that we had when Trump won that first GOP preliminary, right? Then there was a bit of a scare in the mix because we had the walls and stuff and migration considerations coming up as well. But the market is globally suffering from Alzheimer. We know that. It trades something 2 days, but if it doesn't get worse, and we've seen that with a lot of events of late, not in the least Ukraine, Red Sea, and all of that. But then if it doesn't get any worse and in the MEX it didn't get really worse, then you're going back to what the fundamentals are telling you, and that you look at a positive equity market and a very, very, very high yielder. It's the highest yielder in things that people commonly trade, and and perhaps there's a bit of speculation now in MEX versus Swiss as well, with the SNB upcoming. Who knows? That could be another positive carry one that the people are looking at. I'm not sure they do, but just a thought. So the balance of what could go against and what is going for the MEX right now, to me, it still looks relatively positive MEX.
Yeah. Do you think we've got any election stuff in this yet? Because I would have thought MEX would have weakened on the back of a potential Trump win.
Yeah, absolutely. That's the scare. That's the scare that we had. When was that? Early February, right?
Yeah.
That's that last blip that we had there. Was it January?
That one in there?
Was it somewhere in February? The second one. I don't recall. But yeah, we had it, and that's where we even talked about it in the room. Okay, that's a bit of a blueprint I set of what could happen if Trump gets reelected. But in the meantime, they are still anti-China and they're still friends on nearshoring, and you can't look beside that right now. I mean, again, for the medium term, I compare it a little bit to the opposite of the spectrum of the yen. The yen has something that will go for it, but you need to take your profits relatively quickly. And the MEX is the opposite side, because of the yen is still a 0% interest rate currency, and they're probably going to go very slow. And we have seen economic data being mixed at best in Japan. The MEX is on the other side of the spectrum. You got an 11% currency, and there's not yet in the facts a lot going completely against it.
Yeah. And unfortunately, that's one of the issues with being in a higher rate environment. If everyone was at zero, you could probably pile up longs in dollar MEX for a bit of a Trump play and sit on them till November. Absolutely. But you can't do that with when you're paying out as much as you are on this one, being in long. So that's one of the downsides having a high interest rates globally. It screws you up on some longer term thinking. But that's the markets we're in anyway. Mate, did you want to grab it for a couple?
Yeah, I'm going to have a quick look at some pairs that I'm looking at. And the first one is the Aussie dollar, and we had this yo-yo on the other day, you know, on the data. But if you look at it from a bit a wider angle, since we've broken above this resistance here, it hasn't looked back really. It hasn't looked back really. And if you look at the cloud, for instance, we have not closed outside of the cloud um, thus far, even with this yo-yo that we had. And in addition, the other levels that I have here, 65.80 up to 66, the figure, they are holding right now. So I think for the upcoming data out of the US, I have a look at what's happening around perhaps 65.80, and that's if we start to close below there, probably the music may stop for a while, but for as long as we hold this area in the high 64s, I think nothing is changing, and any weakness in the US data are probably going to be accentuated here as well, and we could have a revisit of those highs around 66.70, where also the cloud comes in. And why not, if the data really weaken, have a look at what's happening in the 67 area. But this doesn't seem to me like it's bearish, and it's also, you know, those antipodians trade pretty well when risk is doing okay. With copper as well, back above $4. This is less in the Kiwi is less obvious, but we're starting to hold that 61.40s, the prior low, where the bottom of the cloud is 61.30 as well. And we are trying to get a foothold here above that trend line. So weakness in data there, possible move into the 62s, you know. And on the other hand, if you start to close below this low here, 61.30, it's probably not a great idea to keep any position, at least not, or perhaps the dollar can means that the dollar is going to get some of its own back, and we could have a move back into the 60s. Euro dollar, I'm not looking at it. I know it may move and stuff, but again, as I say, the differentials are not moving. The option vols are ultra low, and so far the volatility traders have had the market in their grip, but we can't ignore that 109, 109.15 is holding. So that's the first thing. I remember this 109. Just reiterate this 109. Where is it? Is the 15 109.17 is the 50% of the move lower that we saw this year, right? So this is already a level to watch for any close. Weaker data, same thing. Market likes to sell dollars. Dollar is probably going to have a look at the high 109s again. Can it break? If the numbers are really bad, yeah, and then we trade up in the 110s, likely. Get numbers as expected, I would say it's going to be a very uninteresting pair again. You're looking at vols which are in the 1 month threatening to break below 5% right now, which is we are right trading on it, which is starting to get low, right? So that is euro dollar, but the one that's interesting, I reckon, is cable. So we had this setback on the cable here, a bit of a wishy-washy. We went down into that zone and then bounced relatively strongly. 127.85.95 is a bit of a level here to watch this afternoon, and I would say watch this one around 128.25. If we start to get back above there, this is a bit of a longer term as well trend line. I know some people have it lower, but mine comes in around here. Okay, if we start to get back above 128.25 and hold, there is a possibility to move back above here. Bigger picture, still 127. So we could be in a new range here, and instead of bouncing inside 126, 127 and a bit, we could be building a new range, 127, 129. That's very possible as well. But I wouldn't exclude on weaker data that sterling is one that could do relatively well. So those are the main pairs that I'm looking at right now. I'm not a big fan of trading yen right now. We only have to note that we are starting to cap the 148. We are starting to cap around 148. Okay, so that's a bit of an interesting one. And then I have a 148.30 just above there. But I'm not really a big fan of trading yen right now because there's so much to happen in the coming week over there, and we have the Rengo. I think the Rengo results tomorrow, the first Rengo results tomorrow as well. So that's keeping me a little bit away from the yen. Yeah. Swiss, I could look at it every day, but nothing's changing. The Swiss is weakening slightly. But yeah, Euromex here, it's trying to break below this wedge. It's also broken under the earlier this year lows, and still think we are on our way to possibly low 18s. Just really, as we've been talking about it, and I've been talking about it very often. There's more still working in favor of the MEX if you put everything if you look at everything really then against it, and especially it is very tough to be short MEX if you have to pay funding away every day. Okay, so this I think is possible that we are going to see a move down in the into the 18s, low 18s, and that's about it right now. Dollar Swiss, that's the other one. If we start to get above 96, no, that's the Euro Swiss. We are again on resistance. I still think we could reach up there before the S&P. Okay, it had a nice hold, 96.75. Have been saying that already. Dollar Swiss a bit interesting on the other side. If we start to cap here just above 88, the figure, that's going to need a pretty decent US data. If the US data are decent, then I reckon we're back on for a test of the high 88s, which that would be a nice one for my option position, of course. That would be great. Back over to you, Ryan.
Thank you very much, sir. Good stuff as always. We'll call it a day for today. Trade safe over the US data. Watch out for those numbers. Watch those ranges. If you get some of the range edges, bigger levels tested over that data, might give you an opportunity, which I hope you will take and make many pips out of. We shall see you bright and breezy. I'm off for the rest of the day. I'm up town for the football. Hopefully a good result. But yeah, we'll wait and see about that one. Thank you ever so much for coming to the Flow Show. Join us on, or join Kay and the rest of the team on Face in some 45 minutes. And otherwise, we will see you tomorrow. Have a good one, everyone.
Cheers, folks.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.